Yes, so hello, good morning, everyone, and welcome. So today is Monday, and we are speaking about agility. Thank you for joining us this morning. My name is Elena Grunic, and I'm responsible for the Central Eastern Europe at the SME Banking Club, and I will be your host today. And I'm delighted to be joined by our Agile experts, John Mark Williams from Agile Business Consortium and Maria Zinitsa from the Integrated Consulting Group. Thank you for joining.
Good morning, Elena and Maria.
Good morning. Thank you for calling me an expert.
You are, definitely. Okay, so before we start, just a quick organizational moment. So our webinar is scheduled for half an hour. The format of today's webinar is a panel discussion, so you're welcome to type your questions right now, even from the start. So, and we will be answering, I think, them at once. So you can type your questions into the chat. And we are recording this webinar, so right after we finish, you will receive the link to the video. So today we continue the topic of agile in risks. Last Monday we talked about the place of risk department in agile structure, and today we want to focus on how to manage risks in projects and how actually SMEs themselves are dealing with risks. So let's recap shortly our previous talk and get to new details. Maria, would you start?
Yeah, sure. So we saw two sides of this, actually by a fortunate mistake, I would say, because when initially we started to talk about how risks are managed in an agile project, we are talking about in general agile terms, and then we understood the positioning of a risk department in an agile environment is something to be considered. So there you go, we have two sides of the same coin. And this is how we started. I want to go to the next slide, but somehow my view is changed. Yeah, I'm going to the next slide now. And what we tackled last week was a discussion that where should the risk department of a bank should stay, inside or outside of a delivery team, with arguments of pro and con on having a risk with an agile team, which we have tackled in quite a detail last week. Our conclusion was that most likely to have risk department inside a team, a full-time allocated job, would not be something that is lucrative, let's say. It will be helpful to have it once in a while. It's helpful to have like a single point of contact, a designated person. It's helpful to be very close to the team. However, risk department within a bank is something that is core to the development of a bank, and for obvious reasons, you would want to have this risk department centralized and make sure that you have the same approach across all teams, across all agile teams that you are having in a bank. So basically, that was a discussion of last week. What we want to tackle this week, and again, by a fortunate mistake, we have extended the subject because we realized that dealing with risks in an agile environment is not something necessarily out of a book, out of a methodology. And actually, we have SMEs that are dealing with risks in a very natural way. And we have elements that have been borrowed naturally from Agile. And here I would like to invite John to share us some of his views on SMEs tackling with risks. John?
Thank you very much. Thank you very much indeed, Maria. Yeah, now this is very much a generalization. Of course, there are many SMEs, and it's difficult to generalize about a cohort that is so various and so diverse. However, if we zoom out quite a long way, we can see that there are essentially two types of SMEs out there in the marketplace, those which we might call growth focused and those which we might call lifestyle SMEs. The lifestyle SMEs, and I stress this is not a derogatory term, it's just a descriptor. The lifestyle SMEs might be those who are at a stage where the owners of the business or the board of the business, they're doing pretty well in life. Okay, the business is turning over very, very nicely. It does a profit every single year. The people who own and run the business have a nice house, nice car. They go on good holidays each year. Their children are in good schools. They've got a good lifestyle generated by the business, both for the owners and the people working in it. For them, a risk is something which puts that at risk. So if an opportunity for growth arises, which involves moving some of the capital or indeed some of the profits to a place which is a little bit more risky than they already see, they may be averse to that risk. So they will not want to risk that solid, steady lifestyle, that status quo, in order to grow the business. A growth-focused SME recognizes that actually growth is the only place that is low risk. Because if an organization is not growing, then actually it is in the process of stagnating. So growth-focused SMEs are those who accept risk as something which goes hand in hand with growth. What this means is for an SME bank, is actually there's a need to get inside the head, the mind of the potential audience, the target audience that you have, to identify what kind of motivation do they have, what kind of appetite for risk do they have? Because it's not just the bank that is possessed of an appetite for risk, SMEs are as well. And because they live much closer to break even, much closer to enforced agility than most banks do, actually their attitude to risk is really, really important. So one of the ideas that I would lay on the table, we talked a little bit last week about having, for example, a risk business partner for different parts of the bank. It might be interesting to think about, is there a risk business partner role that could be played by the SME bank with their SME client base? So essentially two types of SMEs, and remember that over time, the attitude of an SME can change from lifestyle to growth focus, depending upon the people in the business, their attitudes. We all change over time. So for the moment, let's think of them as two groups, and let's think about how risk might play between the SMEs and the bank for their future support by an SME bank. Maria, what do you think?
It's actually a very interesting topic because we discussed last week about the bank's approach. Well, we started with bank in need of agility. And then we started on how does a bank achieve agility, especially in this segment of SMEs that is extremely, extremely competitive environment and extremely volatile environment. So we discussed about the theme of trying to build products that are relevant for those SMEs. How do you make yourself relevant for an SME that has a lot of challenges, a lot of changes in their environment, and bank should be at least of the worry. So what I'm getting from you, and I'm just trying to see if I understand it, would that mean that actually for banks, would it mean to have a different approach to design of products and services when looking at SMEs and considering this this profile, this growth profile? How would that work exactly? Because indeed, if I'm dealing with a lifestyle SME and me as a bank, I'm having in my early warning signal the fact that turnover is stagnating, I will withdraw a credit line and punish a company for being itself. So.
Yeah, absolutely, and I think the what you've hit on is the fact that it is not enough just to know the mindset of the SME, and it's not enough to know whether that mindset is likely to be different in 6 months' time or was different 6 months ago. Excuse me. What is important is, what does the bank actually do about its knowledge of that mindset? And the idea of designing products and services to fit the customer is not something that actually has been embedded in banking generally for quite a long time. Now, I know many banks will say, well, we do, of course, we are customer responsive and stuff. And there are some banks out there, and we've seen one or two which are particularly agile, who definitely wrap their product and service design around the SME customer. However, banking is such that there is relatively little difference in the marketplace, in the mind of the SME. There's relatively little difference between banks. The core competencies which we talked about in the past, the idea of customer service, transactional ability, and risk assessment. The core competencies of a bank, those three, are pretty much the same in all banks. So from the SME's point of view, there's a uniformity in the services and products offered by banks. So the only way to differentiate is to get closer to the mindset of the SME. So if there is a group or team or I suppose a unit within the bank which is dedicated to SME banking, and we're talking to people who are SME bankers, their job is not just to promote the idea of products and services which will enable the bank to make money. It is to promote the idea of products and services which will enable the SMEs either to make money or to retain the lifestyle they've got. So in the instance that you mentioned, if we discover an SME where the revenue is actually stagnating, rather than just pulling the credit line, the bank might usefully have a conversation with that SME about its strategy. Where are you as an SME expecting to be in 3 or 4 or 5 years' time? And how do you intend to get there? And what can the bank do to help you grow? And if the response is we don't want to grow, that's a different conversation. Actually, if it's anything to do with growth, the bank is in a unique position to help.
Can I ask here, John, a question to you, because you were in charge of a scale-up program in Santander, UK, and actually my question is, so the scale-ups actually, these are the SMEs that are focused here on the growth. So could you here give an example, what was actually different in terms of banking products or approach to the customer, exactly depending on that fact that these are the SMEs that are focused on growth?
Yeah, this was the Santander Breakthrough Program. The banking products were, apart from one, they were the same banking products that a bank would provide and that an SME would want from a bank. There was a particular growth capital product which was specifically aimed at growth companies, at scale-ups. However, the biggest difference was in the approach. So what we did was say to SMEs, instead of asking them what banking products they needed, we asked them, what's your biggest problem? Now, in most cases, the problem would be either I can't get the right talent for my business or I can't get the right customers for my business. Now, in neither of those cases would a bank normally be able to say, oh, sure, we can help you with that, because actually they're a bank. However, what we did was explore the fact that a bank, as a quite large business with contacts absolutely everywhere, is connected in a way that an SME is not. So if we think about, most growth is founded upon innovation. Innovation is a function of ideas. Ideas are a function of connections. And whilst multinationals, banks and large corporates are very well connected with each other, with corporates, with their competitors, everybody, SMEs are very poorly connected generally. So the bank can provide the SME with connections, whether it's about talent or it's about marketing or it's about operations, which are non-financial services, which nevertheless do two things: enable that SME to grow more effectively and more reliably than it otherwise would, and therefore protect the bank's investment in the products and services it gives to that SME. So this is the difference between a purely banking orientated approach and a customer orientated approach. What are the problems the SME needs to have solved? What do you think about that, guys? Maria?
I really like this nice turn of design thinking that the webinar has just had. It's like you cannot really have agile implementation or whatever business implementation these days without this focus on the customer to the bone, to the core of yourself. And I really like this approach because actually, I've done some studies in the past, and we were working with SMEs, and I shared, I think, a bit with you last time. It was the fact that For SMEs, banks, exactly as you said, John, banks are all the same. Most of the times, SMEs lack the financial education to be a good discussion partner for the bank. So they have their accountant, which is not a financial manager, it's just an accountant, and that is the only person dealing with the figures in the company. And then the owner is the one that is smelling the business, but without, more or less, with the numbers attached to it. So usually for smaller companies, banks are more like noise in the background. And also it was our fault maybe in the past as well, because we have had strong negotiating power. So then all the products look the same. You cannot really design something for a customer. However, once you start from the customer, you understand that SMEs as a portfolio, because you can do portfolio analysis here, have some trends, have some general needs. And indeed, some of them cannot be solved by the bank. But bank, and I've seen this idea also around also around some other conferences that I've been, banks can act as platform. So that will be like the next level, because indeed banks are connected. Banks are in the environment that they have access to a lot of economic news, projection, forecasts, impact on the economy, legislation changes, fiscality, taxes, you name it. So once you can be with your customer, first of all, not annoy that SME with constant asking of documents and whatever. And second of all, just offering them not only payments and credit lines that are so fixed, but offering them products with truly value added. That is the bank that is going to differentiate from the future.
Yeah, I think one of the most important things that emerged from the experience that I had, particularly with Santander, but with lots of banks and lots of SMEs, having been an SME a number of times, in the service sector, as opposed to manufacturing in the service sector, the outcome is always co-created between the service provider and the customer. Which means if we want to have a very high quality outcome, both the service provider and the customer need to contribute to that high quality outcome. So if we extrapolate from that, it means that one of the things the banks need to try and do is to raise the quality of their customers, not just the quality of their own products and services. And then picking up on your point about SMEs, excuse me, not always being effective discussion partners for the bank, because of course it's not the SME's job to be a bank, it's the bank's job to do that. One of the ways that the bank can help the SME be a better customer is this idea of almost not quite educating, because that makes the SME sound ignorant, but helping to guide the SME towards the financial behaviors that will actually produce a positive outcome both for the SME and for the bank. And I did I'll share with you, actually, we might be able to share with the audience later. I did a paper some years ago, which was exactly around this idea of the understanding gap between banks and SMEs. And one of the challenges is, of course, engaging with SMEs is a labor-intensive business. It takes time and it takes direct engagement from lots of people. And banks need to be lean, because of course their margins are not as big as they would like, and not as big as many people think. So it is understanding that the SME needs help in order to be able to co-create the outcome that the bank wants to see for the SME, and that actually is a labor-intensive operation. So a couple of challenges there for banks, I think.
Yes, and I see the comment of Nuno Oliveira saying the banks only want the profit. And actually, this is the struggle that all the time you see in the banks dealing with SME. It's labor intensive. When you look at the ratios, you do not have the profits that a corporate will bring you. At the same time, you require more people to manage the portfolio than with retail customers. So it's like neither corporate, neither retail. You cannot really compare the ratios in terms of efficiency and whatever you may have internally. So, but SMEs is actually the game for the long run. It's really the long run game, because this is the segment in which you as a bank and also the companies can have good profits, but as long as you deal with it as a whole and as long as you understand how it functions. But if you are trying to aim with one product fits all and to abuse of your negotiating power, indeed, you have this. I think banks have the worst image within this segment because of this approach.
Yeah, and Nuno, you're absolutely right. From the point of view of an SME, and I've been an SME more than once, absolutely, banks are only interested in the money that they can make from us as SMEs. Now, of course, that's why it's so important for a bank to think about how can we differentiate ourselves from that image, because this isn't just about a uniformity, a common image in the sector. It means that the sector actually has a monopoly. The sector, because if all the banks are the same, then it's in the mind of the customer, then they are effectively just one company and there's nowhere else to go. Now, this is why those banks which will prosper in future, and remember, we're talking about SME marketplace here, which is absolutely enormous, huge marketplace. Those banks that will prosper will be those who can differentiate themselves, not just on a financial basis, but in a way that helps SMEs achieve their goals. So whether that goal is lifestyle or growth, the bank needs to be customer orientated. And we're back to this design thinking approach, really. We start with the customer. The basic principle of agility, start with the customer's needs. And in a way, those banks that don't invest, and this is important to get away from spending by the bank, if they don't invest in changing the nature of their relationship with SMEs, in the longer term, they will not prosper, because there are plenty of organizations who are poised to do that, and some of whom are doing that already.
Indeed. And it has to do with, you have marketplaces and fintechs coming from and approaching this segment, because there's a huge opportunity here. And I like what Nuno said as well. It's like the transparency part. Imagine what if a bank would simply say, this is my risk approach. This is what I need. These are my standards, basically, to continue the relationship with you. So I would need this, and in plain terms, and also show the company how monitoring is done and what will happen in case of, certain ratios are not met. Be completely transparent and monitor real time together with the customer this evolution, because at the same time, the customer will understand better about their business and will manage the risks. And we're coming back to the risk now. We're managed better the business risks that they have, because they know how to do their product. They know very well. They are the best in doing their own product and service. But some risks they cannot really see. And the bank can play a very good role in showing them those risks and managing together those risks in the business. Olena, I think I interrupted you.
No, I actually wanted here to comment that actually this is why we are, as SME Banking Club project started. We are not calling ourselves as a corporate banking club, okay, but SME. This is just because of this reason, because SME segment in the banks was somewhere between retail and corporate, and ignoring such a big part of the marketplaces, SME is not an option anymore, I'd say. So banks they are interested now in working in this segment, because the segment is huge. But as we discussed, yes, this takes time and engagement, and that's why, we are our core team are ex-SME bankers, and we just love SME banking, and that's why we are doing these Agile Mondays as well, to share actually the experiences and exchange some cases, what banks in different countries are doing to actually maybe speed up a bit some innovations for SMEs and the banks, and actually what differentiates banks now exactly on the market is not the financial services that they are providing to SMEs, but actually these additional services that helps SMEs in their everyday business life.
Interesting. Yeah, one of the things I was going to say, and I'm so pleased actually, Elena, that you came in immediately and said that, because I was going to say that there's a project here, if I can call it that, with the nucleus of which is the SME Banking Club, which is about how can we explore ways in which banks and SMEs can get closer understanding of the mindset of one another. And I think, of course, that all banks are thinking about this, and there are a number of business clubs that are thinking about this. I think, though, that the SME Banking Club, because of its provenance and history and who it's for, is in a unique position here. So one of the things that I was going to say is that I will share the paper that I wrote about the understanding gap between banks and SMEs with you, and we can refine that and then share that with our audience. And then on the back of that, maybe we can start a conversation, because of course with the virtual communications that we've got at the moment, we can scale that conversation quite easily. We could start a conversation that says, okay, how do we overcome this the understanding gap between banks and SMEs, and how do we also overcome the understandable impression that SMEs have that actually banks don't care. So that might be an interesting and focused project for SME Banking Club.
Yeah, thank you, John. This would be great. Yeah, let's do it. Yes.
I think it will be really nice, because this gap then should be shortened, let's say, because I think from the past, banks are also regarding SMEs like, given that the history was not that there is a good partner for discussion, so they try to simplify maybe too much, and they are less transparent. But once you try to deal with and discuss with the SMEs, banks need to understand that even if they don't speak in very fancy financial terms, the SMEs are actually the most agile companies that there are on the market. They are faced every day with the question, will I still have something to put on the table tomorrow? Because the client base is extremely volatile. So, and this segment has a learning curve extremely steep, because their survival depends on their learning curve. So the way they are managing their business, it's actually they are intuitively managing the risks of their business on a daily basis. They are constantly adjusting, adapting what they are saying. And actually the larger corporates should study SMEs in the way that they are focusing on, they are managing their business. Because when we're talking about agile here and the business agility, there are a lot of elements from the agile world, agile mindset, that SMEs have it have them naturally. And if you talk to an SMEs, and I have talked to them about agile, it seems like such a pumped up words for something that is normal to do, that they are actually like, yeah, but there's nothing new in that one. And then I go, yeah, but the bigger companies need to be reminded of those things, and everything needs to be put together in a structure, methodology, principles, whatever. Because this is, yeah, John.
Yeah, and I think for me, the analogy, I remember talking to an SME at one of the events that we did, 300 SMEs in a room together, all talking to each other, and listening to a bank. And one of the things, he said two things, the gentleman, he said, first of all, I got much more value out of talking with the other SMEs here than I did listening to the bank, which is unsurprising because, of course, they share all sorts of things. And the other thing he said, which was interesting, he said, look, if and this picks up on your point about SMEs already having to be agile, he said, every day I have to do things like, I need to climb up that tree, I need to swim that river, I need to abseil down that cliff, I need to be agile enough to do all of those things. And then the bank comes along and says, we'd like to sell you this nice chair because this is what the bank makes. And that's not going to help me climb up a tree or swim a river or abseil down a cliff. And that's all the bank can offer me. He said, I go to another bank and they say, oh, it's never mind their chair. We've got a much nicer chair. It's a different color look. And they said they just don't know or understand what it is I need to deal with every day. And it's possible but there's an awful lot of business partners appearing here. Maybe there's an SME business partner that we need to have within SME banks, I think, really. And in a way, that's exactly what I became at Santander, because I came into the bank not with a banking background, but with an SME background. So was able to talk within the bank about SMEs and how they function and how they think and how they behave, and connect the bank and the SMEs. So I think it might be useful for SME banks to think seriously about engaging with an SME or a group of SMEs in ways that they have never done before. Not just research, actual engagement into relationship. And then maybe the SME Banking Club could facilitate something like that.
Mm-hmm. Mm-hmm. Yes, exactly.
And actually,
yes, Maria, yes, please say.
I was just meant to say that a lot of times we think that we need statistical relevance and that we need a lot of numbers, and we see that as an obstacle in our approach towards the SMEs as banks. But actually, once you have a couple of customers, you already get the feeling of it, and keeping these customers close is actually going to teach you as a bank how to manage better the changing environment and how to adjust better your products and services, way more than any desktop research that you will ever have.
Yep. I think if each director of the bank spent 1 week every year working in an SME customer, that would transform the way the bank sees SMEs, and it might not be that difficult.
Indeed. And with that thought, I want to share something else with you. Indeed, it's if you go live in their shoes, and I've been in an SME, more like a micro company, starting. So I was a banker now in the micro company world. And I have to tell you, I have the discussions with my bank, and I used to work in a bank, and I'm like, what do you mean? And it's something, like, I know we are approaching the end of our discussion. I just want to leave you with one more slide, and the thought of how small businesses and agile projects are managing risk. And this is I just put together, there are two graphs, you find them a lot all over the internet when comparing agile ways of working with traditional ways of working. And basically, in agile, when you start from a customer, you want to deliver value as early as possible and incrementally, because you might want to be able to change at every step of the process according to the customer feedback that you have. So business value, you will deliver it every day, basically, towards the lifetime of a project. This is the point where bank should understand and should learn from it, because if you as a bank, you are working on that chair, as you said before, John. Mm-hmm. You will just deliver a chair at the end of the cycle, and then that chair might actually be obsolete, and they actually need a table meanwhile, or they need a rolling chair or whatever. And there's another thing that I want to show to you is the risk approach of SMEs and also of agile projects. Risk is, if you want, mathematically speaking, is when you have minus the value. Is as simple as that. And when you look at it and you're driven by delivering customer value and delivering positive results, whatever will threaten that part, you will be with your eyes wide open to mitigate as early as possible. So risk in agile project, risks for SMEs, if you want. They don't have a department called risk department, and now we develop this product, and now we go to the risk to get approval. No, it doesn't work like that. They start with a project, with a product, with a service, and then they see some risks, and then they stop developing because they see, if I develop, but I don't mitigate the risk, the chances of that minus coming in early is actually more than me delivering incrementally further. So this attitude towards risk in agile and SMEs as well is something that comes naturally. It is the responsibility of a team. yes, to deliver value. Whatever threatens that value is something that I will not want to have, and I will try to remove as much as early as possible in the project.
Yeah.
So, and this is why risks in bank, actually risk department in bank, once you develop this kind of teams that are, you develop business teams that are also responsible for the risk that they create with their products. Actually, risk department in a bank should only be in the position to give guidelines and to agree the guidelines with the business. But it is the responsibility of the business that is creating value also to mitigate whatever is threatening that value for the business.
Yeah.
So that's why it works smoothly in an agile environment.
Yeah, absolutely. The delivery of business value immediately, rapidly, and often is in a sense the only effective way to mitigate risk, because one gets customer feedback immediately. So yeah, I think that, and I like those two graphs because there's a very nice complementarity about them.
Mm-hmm.
Yeah, thanks. And actually what I also saying lately, that actually SMEs are expecting already from the banks to be their partners. So they're expecting from the banks to be agile as well, because as we were discussing, the SMEs are agile by nature, and they expect actually all the partners to be agile as well. I mean, the same way as they are, especially now probably in crisis times when the business conditions and the marketplace is changing so quickly, and also when there is so many unknowns on the marketplace. I mean that you cannot forecast maybe really even do a short-term planning of your business activities. So I think that's why SMEs are really expecting very fast reaction from the banks, very fast, products and some solutions to help them now, exactly today, not tomorrow. So that's why, yes, this, I think the topic we are talking already the second Monday about the risks in Agile, and I think this is one of the very important elements in the bank's strategy of becoming agile, especially in SME banking. So our time actually is getting over. So maybe a very short summary from your side, and we'll close the meeting.
Yeah, sure. Yeah, my suggestion would be to banks: be aware of the market risk that exists in not satisfying a very large cohort of potential customers. That's the risk.
Indeed. And for me, I will just make an analogy that I know John would love. It's about running. I had a teacher who once told me that it's not enough to walk these days. The environment is moving so much that actually walking, you will see people passing you by. So basically, the analogy is that SMEs and agile companies are the companies that are always at a running pace. And that is the pace that will get you somewhere. If I want to partner with this client segment, I have to understand their pace. And I have to be able, to have a decent conversation while running alongside them.
Yes,
very elegant.
Exactly. Yeah. So we'll be finishing. Okay, we have one comment that we will answer now. Don't you think, from Nuno, that if SMEs knew how banks evaluate their business, they would be able to better prepare themselves for the financial challenges they need?
The short
indeed.
Yeah, the short answer is absolutely yes. And this comes back to this, not just the understanding gap, but the conversation gap between banks and businesses that needs to close.
And the transparency, conversation and transparency.
Yep.
I noticed something about you as a company. This gives me a signal. For me, it's a warning signal. Is this something that I need to worry? Just to be transparent on how I monitor what is happening, what are my decisions behind the monitoring that I'm doing. Yes.
Yes.
Oh.
Thank you. Yes, so we will be closing
the
meeting. Yes, thank you, Maria, and thank you, John, for your contribution today. Thank you, all attendees, and thank you, Nuno, especially for the engagement in this in today's webinar. So thank you all, and see you next Monday at 11 a.m. online. Thank you, and goodbye.
Bye.
Goodbye.
Bye.
Bye.